Alright guys, let's get into top-down analysis starting today for the week of December 28th, the start of the Santa Rally. We're going to start with the weekly chart on NQ, and this will be available on our YouTube channel, so you guys can all watch it as needed if you need to brush up your skills on technical analysis. So we're going to start with the weekly chart, and the first thing that we see is market is in a confirmed long-term uptrend, meaning I'm looking all the way back to 2020, and we can see we're setting higher highs, higher lows, higher high, higher low, and we can see the overall trend is a long-term strong uptrend. Price is above all the major EMAs. So we have the 200-day EMA here, the 500-day EMA here, and the 1,000-day EMA here. These are all big institutional trend support levels. The key weekly structure that I see here is we have major resistance right around the 26,650 range, and we have major support around the 24. Let's see, let me look at it here. About the 24,150 to the 24,300. So that I would call my weekly demand and EMA confluence here. We have an ascending structure, so a rising channel, meaning if we put a channel on the structure itself, we can see everything is ascending. We have no weekly lower low, so the trend's not broken. And if we look at the last couple candles on the weekly, and we zoom in here, we can start to see that we're showing compression. And we're showing compression under resistance. So on the weekly, nothing is bearish until structure breaks and we set a lower low. Pullbacks are great continuation opportunities. I wouldn't call them reversals at this point without a lower low and a lower high to establish that. So my weekly basis would be bullish and basically continuation bias. I don't really see any short side bias on the weekly unless the support fails, which would be that 24,300 range. Let's switch out to the daily. We'll go look at the daily. And here again we see the same thing. With daily market behavior, the daily trend aligns with the weekly, so trend is following the environment. If we look overall here, price respects the rising EMAs. Always a great visual reference to just look fast. VWAP's being respected and not out of range. Prior daily highs and lows are being respected. So right now, if we dial in a little closer to the last several days, we can kind of see we're bouncing in a channel. We're consolidating below daily resistance. We still have higher lows continuing to form. And looking at the size of the candles, the bodies, it looks like volatility is contracting or building energy to me, and we see that in these compression runs here. I would mildly say the pattern on the daily is more reminiscent of a higher time frame bull flag or rising channel. The compression under resistance that puts us in the decision zone. so I don't see any impulsive sell candles. Tells me sellers are weak. And one thing I will teach you guys is that when the daily charts consolidate near highs without aggressive selling, the next move is usually expansion, not collapse. And I see a failed breakdown here. So that alone just says that the upside is the strongest probability. Anybody have any questions so far over here in the Discord?
No, sir.
Okay. Daily scenarios, we're gonna stay bullish if we get acceptance above 26,000. That's our continuation. If we get a reset or a pullback, we're gonna look at pulling back into 25,300 to 25,500. That I would kind of call more the buy the dip zone. We don't have anything that signifies bearish. We don't have any daily close below structure or the EMAs, so still not looking at that. Anything other than just a buy the dip zone. And that's kind of what I got for you on the daily. Let's go take a look at the 4-hour. Four-hour still respecting the higher highs, higher lows. Definitely clean higher highs, clean higher lows when I zoom out here. Got nice solid strong uptrend. The pullbacks are rotational, so consolidational, they're not impulsive. EMAs again stacked bullish. We got the 921 cross just recently here. Everything's pointing up. Let's see, what's our failure here? So we made a strong run at setting a lower low here, and it failed, and it reclaimed VWAP pretty fast. So that failed breakdown here with that fast reclamation is a very, very strong bullish continuation signal. And again, the one thing I see clear as day is that we have an ascending channel and the range is tightening, so we're compressing. Buyers are definitely defending the dips here. And just something, I don't know if we've talked about this before, but when we see these dips that are shallow and the pullbacks are fast to recover, buyers are in control. And a lot of people will confuse that and think, well, sellers are in control. No. It's not chop, it's structured rotation when you have a dip and a fast recovery. Anybody have any questions about that? Alright, hearing no questions, let's move on to the 1 hour. So overall, looking at our higher high and higher low, our trend is still intact. No aggressive downside momentum. Pullbacks definitely stall pretty quick. And buyers are definitely stepping in before we get back to testing deeper support. So as far as the hourly trade goes, the environment, I'm long biased. Shorts are counter trend, scalps at best. Your best trade scenario here is going to be a pullback and then long into a continuation. And my biggest rule of thumb here is if the hourly trend agrees with the daily, don't fade it. You line yourself with it, right? the hourly says we're going up and the daily says we're going up, then we're going up. That's just the honest to God simplest way to look at it. So again, you can see overall trend is up, EMAs are supporting it, higher highs, higher lows, we're consolidating and compressing. And when I say consolidating and compressing, you can see that at this point here, when we broke in, set that all-time high, we get that pullback. Now we're not pushing up as high, now we're not pushing down as low. We're back at this point to decide, so now we either got to decide if we're going to come down or if we're going to expand up. And given the fact of the prior analysis on the other charts, with the compression, no significant seller controlled fades, I'd say we're going to break to the upside. That would be where my money is, and given the fact that we're at the first day of the Santa rally, I think this whole week pushes us up unless proven otherwise. Anybody have any questions on the 1 hour?
Yes, sir.
Perfect.
Negative.
All right, let's go look at the 15. So the 15, when we have multiple time frame confluence, is probably better to take your trades on. It's going to give you a little bit more of a longer term play, a little better accuracy. I see, looking at the chart right now, a lot of micro higher highs, a lot of micro higher lows, compression near the highs here. So price is really starting to flatten out. And this is where I say to all of you guys, put a box around it and you don't trade until you're above or below the box with a retest. VWAP, EMA clusters are being magnetic. So price, if we look at this real close, we're not getting far away from the 9, the 21, or VWAP in here at all. That is your price compressing. Y'all see that? See your EMAs here, institutional EMAs down here, retail daily trader EMAs here. And they are tight. They are all running pretty close together. So that acts like a magnet. That means it's going to hold the price in that range pretty magnetically for a while. That means we're waiting for liquidity, and it's either going to be a break and run stops higher or a dip and trap shorts to reclaim and run. So your best long is going to be a dip below VWAP and then reclaim it immediately, an EMA pullback or failed breakdowns. And so far this is looking like it's trying to do another failed breakdown. Worst trade you could do is chasing highs or shorting into support. So keep that in mind. My best advice is that lower time frames don't change direction, right? They execute the higher time frame plan. So if we keep that in mind, we already know we're upside bias. So big picture, if we go by time frame and bias, we know the weekly's bullish, we know the daily's bullish consolidation, we know the 4 hours bullish rotation, the 1 hour is bullish execution, and the 15-minute at this point should only be used for entry timing, would be my suggestion. And what I'd like to see is for all the time frames to align and wait for the price to come to us and find that best entry. So if we go start looking at targets, and let's say we're going to develop couple targets overhead, couple targets below us. I can immediately see that above this candle here, we would need to pretty much, well, go retest the 950. So we'll throw a line on there. That would be my first target to the upside. Oop, that's not what I want to do. And this is just gauging Asia based on the 15-minute chart here. Why I like the 950, it's more psychological than anything, but it creates two things. It sweeps the prior high. It's a repeatable rejection and acceptance zone, and it's a common Asia magnet, so it wouldn't surprise me. And Asia really loves testing round numbers. Even if New York and London did the heavy lifting to get the heavy lifting to get us there, Asia really loves to test round numbers. So always keep that in mind. My second target, if I'm looking at structure and I'm looking at movement here, and I look at upper consolidation, if I'm looking back here, so I definitely like the 120 to the 180 range for a breakout here. See if we see a little more to the left. Yeah. So there's the 124. So definitely like the 120 to 180 range. But my immediate would be looking for the tag of that 120. See if we can find a couple more overhead. Just looking back here. So I see a low volume pocket up here. That's I just like the 120 even more. I think if we hit it, the first touch will stall. If we come back to it, then we'll see that 180. That second touch will decide if we're going to continue or if it's going to reject. So, what do we have over here? So I like the EMA cluster flow here. So if we're going to test that, we're going to need to break above the 350. Sorry, my dog sounds like she's a 90-year-old gagging.
Never mind. I forgot. My bad.
Alright, so that would be my third target. It's looking left here, it's point of control, prior daily balance high. I like it. It's pretty much, well, nice Asia stop, clean zone. And I think if we're gonna get extra spicy, we need to be up here on the 650-ish. So yeah, we would have to run and set all-time highs here, which I think we'll get to. I'm just not gonna say we're gonna get there in Asia. But you never know. Can rip your face off. And oop, that's not our all-time high. What am I doing? That would be our weekly high. So our liquidity, if we're gonna sweep liquidity, would be above the 650 range. I would love to see price travel up there and sweep that. But unfortunately, Asia doesn't typically get there very often. It'll tag it, but it won't go into the liquidity. Above that, on the rare chance that we got there this week or with the Santa rally, I'd be looking at the 26,900 to 27,000 range. I'm not going to put that on the chart yet until we get some more confirmation. So let's flip that and let's go look for targets to the downside. So immediately I'm liking consolidation, rejection here, blow through with the gap. I like looking left. I like the 25,765. Oops. We want a number one. And we're going to change these colors to red. The reason I like that is looking at EMAs, looking at the price, looking how it was pretty well respected. Still kind of mildly acting like a point of control. Yeah, I like that a lot. Broke through it, come back down, retest it potentially. So retest could be between 25,800 even and 25,760. We need to keep an eye on that, especially on the 5-minute. It's a good reaction area. It's a pretty common pullback depth in Asia. Nothing horribly scary. But below that, we've got some levels here. You're down there. So let's see what we got looking left here. Yeah, the 50 would do a lot for retests, so let me put a line on the 50 and see what looks better, the 50 or the 500. Yeah, there's some data there, but I think I like the 500 better. All right, I like the 500 much better. We got a lot of consolidational brake above. We got a lot of rejection, a lot of support, and I mean a lot of support. So I would say I like the 25 500 as the second if it takes the first. These would be areas that I would definitely trade to and look for a quick recovery from. So I would like to counter trend trade them as well. If we get down to target 2, it's looking left here, prior day, intraday balance, so it wouldn't be surprising. There's a lot of EMA stack support there. It's definitely by the dip zone in a bullish structure. And if it holds, it just keeps Asia rotational, not bearish. It just means we're chopping. If we're going to go extreme, I mean, we would be looking at just looking left here. I don't like the 280. I like the 250 to 265 range here. In fact, I like 275 better. Alright, that would be my third target for the downside. And I see enough for probably one more good target. Just because structure here. And if we want to do a major psychological retest, I think we go, let me see here, right above, so yeah, 25,000. So if we get a 25,000 retest, that bodes extremely bullish for us. If we break that, then we are breaking structure, and we are probably going to call that a reversal up. Asia doesn't typically trend first. It tests, it probes levels, grabs liquidity, and sets the stage for London. So typically, my advice is we trade level to level using quarter levels. I definitely look for the fake breaks, but I always keep in mind that it typically respects VWAP and the structure. So this is one of those deals where I tell you, don't chase the expansion and don't expect trend days. My experience, a normal Asia session is somewhere between 90 and 150 points if we're moving clean. And we'll typically get one clean test above or below that range. And we usually always end up back at VWAP by the end of the session. And that's some of the things that I try and talk about, and I don't always keep up with you guys here in the Discord. But anybody have any questions?
No, sir.
All right. And with that, we are going to finish our analysis.